Uh, so again, good morning good morning. Welcome to the webinar here at apexinvesting.com. And once you log in as a free member, you can register for our webinars right here under Event Calendar. Okay, we have them almost every Thursday morning. We also usually have a Monday night. And every once in a while, we throw a bonus one in there as well. I was just answering a question from a trader talking about the news trade. And what I mentioned was I go over on my radio show here under Radio Show Archives, or you can watch it live. Every day I go into the news and I talk about the news for the next day and things, just things and patterns to be aware of. A lot more detail than we simply put in the news plan. Now, I mean, the news plan is great because it has the details. Trying to sit there and listen to the show and write down all the stats is pretty tough. But we have all the details, right here. But the details of just hey, this is what's going on. Here's what I'm thinking, and so let's, we look at these on these new trade plans. You got to be aware that when the pound interest rate's coming out, it's going to be followed by the euro interest rate, and when the euro interest rate comes out, it's going to be followed by the euro press conference, and when the euro press conference comes out, it's going to be followed up by the market open. So I try to get as far out as possible on these when I'm putting these in. And let's see here. More time to expiration, more time to movement to occur. Obviously you got to compare them all out. And so let's look at, now the market's opening up. And I mean, the market's, it's been going pretty solid too. This is something that I've, learned. But when the market's just been running and running and running and going, sometimes it can get a little exhausted by the time news comes around. But usually we get that big move. Like I said, a lot of times the euro is always after the press conference. Even the pound can wait on that. And so if we go over here, looking at the euro, the press conference is really, like I said, the big mover. And there we go. There's 128 pips. So by no means would it be a bust unless you chose too early of an expiration. And you got to wait on that news, on that news press conference for the euro. Yeah, pretty much any measurement you use, you should have been fine on that news trade. So if you found differently, let me know. But you should have been good on that one. If we go over and we check out the pound over here, okay, so we'll go look at the pound. Don't forget to look at, pound dollar, pound yen, all that. But let it load up. But good and practical topic. So, very applicable to right now. I love it when it takes forever. So, let's see here. It's loading. It's just taking its time. And okay, that's why I haven't updated that one. So a little tip for you: go over here to, and I went over this on the video. We'll talk about one of the videos here in a second. But this is actually making me clean up my stuff. Go to GBP USD. Okay, so I went to Tools, Instrument Manager, typed in pound dollar, hit search, click Edit. Okay. And then under Session Template, choose Default 24/7. If you do it here, you won't have to do it ever again. Okay? Okay. You won't have to do it ever again until you update NinjaTrader. If you update NinjaTrader, you'll have to go back and fix them. So, because I do get them all, and then I update NinjaTrader, and sometimes I don't stop and go back and update them. But this makes me do it because I flip, and then I get the little error message here. So, now that I've done that, I click OK. And then I just click, F5 or right-click, refresh historical data. Yeah, reload historical data. There we go, not refresh. So I had to do that. And then it cleans up for me. So pound, still taking its time, but, we'll see where it goes. Pound has not really just flown yet. And let's see here, our entry time on pound So I love looking at the new stuff. Let's go over here. Get as early as 6 on the trade for the rate statement at 7. Okay, so we go back here, way back here to 6, and so far we got about 37 pips. So far we don't got it yet. You gotta let these work themselves out. Sometimes they're fast, sometimes they're slow. I usually try to get at least 11, if not 3s, but I'd say almost every time I'd probably get 11s. Let's see. And I always trade both of them, by the way. Or either I just trade the euro or I always trade both. So that's another good thing. There we go. So there's another one to fix. Okay, so tools, instrument manager, pound, yen. And y'all get this down after you see me do it a few times. Hopefully you got it already. Change that to default 24/7. Click OK. Okay. Move that out of the way. Right click and reload historical data. Alright, so we can also go here. We can look at the pound yen. So let's just say you hopped in at the beginning over here at 6. Where are you at right now? You're up 49 pips so far, so a little better, which isn't surprising because the pound yen and the euro yen are more volatile, but than the pound dollar euro dollar. But so that one's definitely, it's moving. Like I said, we're not there yet. I mean, at best, on pound you're probably at break even. You may want to definitely inside the news trade. I do talk about both of them. So, one thing I'll tell you is the pound yen is usually more volatile. Now, it may be more expensive, so you got to look and see, is that affordable? But you usually do get a few more ticks to pay for it. But if it is, then, check that one out. Also, a couple of cool things you can do is, one, you could try to, I mean, it would be a little nuts. You could try to butterfly pound dollar and, strangle pound yen. I don't think that'd be, you probably just break even most of the time. Another thing you could do is you could equalize your risk. So let's say if you're going to do 2 contracts on pound dollar, I would rather do one on pound dollar and one on pound yen. Okay? Or if I would do 100 contracts, I do 50 on pound dollar, 50 on pound yen. Spread the love around. If you're going to have 100 contracts, you're going to do that and put 25 on pound dollar, 25 on pound yen, 25 on euro dollar, 25 on euro yen. Don't use all your, firepower in, one news announcement. So, let's see here. Right, good. Okay, so yeah, you would have had to be 7 a.m. Thank you. So that actually would update. Still get my morning cup of joe here, right? So, need to figure out where to find that. Alright, so let's go over here and do that. So, yeah, you may have to look at a couple things. One, you can look at, I'm trying to think of the best way to phrase this. It's spread it between euro dollar, euro yen, pound dollar, pound yen when you have the interest rate statements. Okay, so these are things like the journal, things that you just, learn as you go. And then on the pound one, then you're going to have to do, I'm trying to think of the best way, you'll have your 6 to 8. So you may, because you're going to want to wait on that euro dollar, euro yen, right? And you know that if it doesn't happen quick, it's not going to happen at all. You're also going to want to take advantage of that euro dollar, euro yen press conference, and you're also going to take advantage of the opening of the market, which usually causes more volatility. So if that's the case, then what you may want to look at doing is, since you can't yet get, since the announcement comes out like right on the line of 7 a.m. On the pound dollar, then you may want to look at either A, going ahead and going, well, that's okay, I'm going to do the spreads. But you might want to look at maybe looking at the 11 a.m. like strangles on the binaries for part of your position as well. So I'm trying to give you, like help you think outside the box. But those are some great points. So, what I'll do is I'll actually go in and I'll edit the news plan to include some of that stuff. So that way, I probably need to repost this in the room here. So that way, we'll have those notes on there, and I try to just continually update and add to and improve on it. But yeah, so and I have some of the notes on there, we just talked about, but yeah, I just need to update that to basically say 11 or 3 binaries. So because obviously you can't take advantage of the spreads right there. Now the one I do have is that potential butterfly right here on the euro pound. So let's go look at that, because that was the other part of the news trade. So let's go in and look at euro pound. So we got on that one. So if you would have done a butterfly or even an iron condor potentially on the trade, that would be the better one to butterfly out of all of them. And I guarantee that was going to be the same error. Let's see here. It's making it load slower because it's trying to figure out how to process it. Here we go. What is it? Control-Shift R. See what faster. Now that I already have it put in there, it'll be faster because it's not trying to process the error. So in euro pound, yeah, we got some big moves over here. Let's see, what move do we get between, I would say 6 and 8. So our high to our low, right there, 30 pips. So euro pound usually pretty low in volatility, and that's actually right here. I don't know if this says no potential butterfly in euro pound. Average move is 37 pips, and it breaks 50 about 35% of the time, meaning 65% it doesn't. So look at the 8 or 11s. So you could have hopped in there at, say, 6, and now you could hop in as early as you want to. Look at this thing. And the further out you hop in, the more money you're going to get. But you can go in there and take advantage of, like the 7 a.m.s. Because you had that 7 a.m. expiration. You could have hopped in that thing last night and taken advantage of that range. And had hours and hours on there to do it. So, a couple ideas. So I'll let me make like I said, a little side note. So I'm going to put in here, euro, pound, consider getting in earlier for the 7 a.m.s. We'll talk about GBP, USD, spread it around. Okay, so, and then I'll talk about only one option for, we'll see, you gotta have 2. If it's at 8, we can have the 8 o'clocks and you have the 9 o'clocks, yeah. So an option at 6 a.m. So 6 you'll have 8 and you have 7 and 8. There you go. And 7 and 8s. So look at the strangles as 8 only gives you 1 hour. Okay. We'll add that in there. Sound good? And updated that. So yeah, if you notice anything, you notice something working, not working, a pattern, whatever. You know, if you would like to see something added to the plan, you're like, hey, can you add this note? Or hey, you said this on the radio show today. Can you add this on there? Maybe I just I'm going through stuff and I just didn't notice I didn't put it on there. Feel free to just post it in the help desk, and I'll look at it and I'll put that on. If you know where the help desk is, instead of trying to, sometimes people private message me in the forum. It's a lot better to do the help desk. So just go over right here to help desk, and they go through. Like I see all of them. So I mean they'll be parsed out, to Ben and stuff. But and John will help out, but I go through. I'll go through all of them right there. Okay, well let's look at some other pieces that have been going up this week and talk about that. Okay, we've added we have the obviously the Nadex trading pit. So, and we're working on a contest. We're just trying to work out the details to make it where people aren't tripping over each other, because it's more of a posting contest than simply a trading contest. The idea is to get activity in the room, to get people posting different trades, and just get things more active, make it fun. Everybody benefits, everybody learns, and so we're looking at that involving computers, monitors, one-on-one mentoring sessions, and other fun prizes. So subscriptions, like a free month with a subscription, stuff like that. But yeah, so we got anyways, inside the Nadex trading pit, inside the elite trade room, both rooms, there's different things going on. The elite room, we're following the elite spread. The elite trades are usually a lot more spread focused, or it's Forex focused, or futures focused, or hedge focused. Going for bigger moves. Okay, the Nadex trading pit a lot of times it's a lot more active. So we're doing shorter term trades, 2 hours or less, sometimes 15 minutes, and obviously pretty much it is all Nadex. But definitely hop in there if you haven't checked it out already. You have access if you're a paying elite member or if you're a paying P3 member. And a lot of it's just helpful just to, get, one guy put up a thing and he could not figure out how to make his Forex work. And for some reason, like, none of the stuff was lining up. And it's just something that, I know because I've been through it before. I think Steven actually helped me figure it out, or Mark. One of the two helped me figure out. And let's see, right here. But I posted it. But we added this to the setup video. And it was, make sure under tools, options, data, quote currency in pip. Otherwise, you're going to have to go in and you have to modify all your settings. Like if you have 10th of pip, there's like a lot of settings that you're going to make 10 times the amount. Okay? So, anyways, whoever helped me figure it out, thank you. Didn't really matter, but we can all take advantage. It was probably about a year ago. But yeah, change that right there to pip, and that will solve it. Because otherwise you'll see like stuff just looking off. And make sure that on the MVP stuff, you go down here, and we've now added the Apex MVP trading system. We also added it under Elite, and it's also just inside the system. We'll be adding more and more videos to this, of course, and more unique private content to members. Just putting different things up. But so if I go under system here, you'll notice now there's an MVP section, and go here. This goes into what is MVP and what is it, how does it work, what's the idea. And so click on that and then reply, and you can post questions there. Okay. And then under how to set up MVP, you can go there. This will walk you step by step through how to post a chart. So, like this person's asking how I changed the background, but they found that under properties. So that's right. You got it. Now, what can MVP be applied to? Again, MVP means momentum volatility predictor. And the MVP, or again, the momentum volatility predictor, it can be applied to really any Nadex market. Uh, One thing that, a good question that comes up is, do we change the session template to default 24/7 for indices also, or just FX? Yeah, everything. Okay, oil, forex, gold, whatever you're trading on. I mean, I don't care if you're trading on Google. Okay, everything. Just put it on default 24/7. It'll pick up the after hours movement and everything. You want that accuracy. Okay. So if you don't use default 24/7, then you're dropping off time, which will mess up your indicators. You want to get all that overnight, after hours trading, period. You want all of it in there, okay? So you have a less accurate chart if you don't use default 24/7. You can always go in and highlight stuff. If you're like, well, I only trade these hours. Well, we have a chart session template. Not template, but go in here, go to your color time regions, click new, and you can play with this. But you can add on, as many of these as you want to. You can go in and make certain colors. You can make one transparent and the other one like grayed out. So like right here, let's say we make this transparent. And then you want to, let's say you start trading at 9:15 in the morning. And you're done at, let's say, 4:15. Okay. Then click OK. And what it'll do is it'll, sort of put a gray area behind that area and make this transparent. Or you can do vice versa. So, but it'll let you know, okay, these are the hours that I trade. So basically I got two signals. Boom, boom. And it makes it very easy to see, when you trade and if that's, an ideal time to trade. Okay. But yeah, that's one of my favorite indicators to use, especially when I'm looking back over different markets. You can set a time to cover an entire chart. It's just, I wouldn't want it to do that because I want to, the whole point is if I use default 24/7, but I sort of want to pay attention to a certain specific time, then I use two different colors on each side. Or I could even have like multiple color time regions for different times that I trade. But I want to be able to highlight the areas that I trade without having to use a cut down session template that messes up my indicators because I don't have all the data in there. Question that comes up: you seem to like currency pairs more than anything? Why? I don't know if I'd say I like currency pairs more than anything. I trade a lot of commodities and indices. So at night, I like currencies more because they move more consistently. But no, I mean, I'm all about. We go over here, we can hop on, and we can do Russell, oil, gold. Currencies also. I mean, you have more expirations. So of course, for the nighttime, you got the every hour thing going on the spreads. You have the every hour going on the euro, dollar, dollar, yen. You have the nighttime 7-11, 3 and 7s. Yeah, man, I did an update on Ninja. Now I got to update all these. That's the only thing is that when you do that, you will have to update them all. Let's see here. So yeah, so I mean, you'll see me go through rounds too. You'll see me go where I just talk about spreads for like a month, and then you'll see me just talk about binaries, and then you'll see me just talk about indices or whatever. So it's more just that's the topic I'm on for the month than it is. I like that more than anything else. So I mean, I don't care. I'll trade pretty much everything. As long as it moves and I can manage my risk, then I will trade it. All right, refreshing that one. There we go. But now my indices can be awesome to trade. So right there. But anyways, okay, so now we got that done. And Right, yeah, you could add the color time region on 5, and you could add the color time region on 10. I think you have to add it twice. If there's another way to do that, then let me know, without having to add it twice. And let's see. Okay, cool. So that's just sort of some, intro questions there out of the gate this morning. Let's go ahead and get into the MVP strategy. Okay? If you have questions, again, please post them. And also, I said, if you have questions, post them, and we'll go through it. And let's see, I got you in the trade room, and I also have you over in the webinar login. So either one. If you're in the trading pit and you're trying to ask me a question, make sure you're asking inside the webinar room, or if you're an elite member in the elite room. You can only monitor so many Q&A sections at one time. Okay? So let me pull up our setup, which if you've watched the setup video on the MVP, 1, 2, 3, 4 section there, then you'll have that. And here's the Russell. Okay, so this morning it opens right there. We got news coming out. Be careful. Let the news all get out. Let the bronze conference all get out. So start trading here. Market opens up at 9:30. And so what we're going to do is we're going to pin this to the top. And then we're going to go over to our binary scanner. Close that out. And oh, by the way, you can go, let's just say I'm somewhere else. I'm on News Trade Point or whatever. I can just go to binary scanner and go to, a lot of people haven't used this, but the out of ticket window. And the advantage of this is it puts it out there, and it also gets rid of all the extra menu stuff at the top. Okay, so you can use that as a trader. Keep trying to merge that one. I might don't merge it. Okay, and so that way I can sort of have my chart side by side here. You know how many screens you have may help determine how well this works for you, and just the setup. So you can you can do different setups, but I mean as well as it works for you. And so let's say we're over here, we're focusing on Russell, and so I guess we got to log into my Nadex account. So okay, you're not connected to your Nadex demo. So let me log into my Nadex demo, and when I do that, I don't really need to watch it. It's there. Okay, I've already installed my plugin. By the way, if you need help on how to use a scanner, check help and tutorials, and there's a whole section right here on how to use a scanner. Okay, and go back over here to binary scanner. Got our instrument chosen. Now what are we going to select? Okay, so let me keep this real simple for you. There's a couple ways to do this. Okay, I have a bunch of positions over on my live, and I'm managing those in a different browser right now. Okay, so easiest way to put this. I'm going to tell you the settings for MVP, but what I want you to also understand is if you're trying to figure out how to use the scanner and it's confusing, put no settings. Hit reset filters. Go down and figure out what you don't want to see, okay? And then go back up and edit it. So like, I don't want this, and just edit as you're going. And that will make it a lot easier for you to do. Does that make sense? So sort of like start with everything and then go backwards. All right. So what you are going to want for MVP is usually I'm going to want 2 hours out. Okay, that's pretty much the most out I go on the MVP 1, 2, 3, 4 strategies here. So the 4-minute is the only one I'm taking greater than 15-minute expirations on. Okay, so that's very important. The 4-minute is the only chart I'm using to do the greater than 15-minute expirations on. Okay? I'm not using the 1, 2, or 3. They give me a heads up that the 4 is about to change, potentially. Okay? What they're really used for is I'll use all 4 of them for EPCs, but I'll only use the 1 minute if it lines up with the 2. So let me go that again. I will do 4-minute signals only on greater than 15 minutes until expiration trades. And again, maximum 2 hours. I will use the 1, 2, 3, and 4 on an EPC, which is less than 15 minutes till expiration, if I get a new signal. But I will only take a 1-minute signal if it lines up with the 2-minute direction trend. So maybe it goes short, and then it goes long again, and the market was long. Then I could actually take a 1 minute. Also, it's very important to notice in the indicators that under 1, I have the setting of 10 and 3. All the others, I have the setting of 5 and 1.5. So make sure you have that setting there, and that'll actually allow you to use the strike on the 1-minute chart. Okay? All right. Are there any questions on just those 2 simple rules? We'll make sure we got that knocked out. Everybody understands that. Go over the 1 minute again, please. Yeah, no problem. Let's say I go in here and I get... Okay, this is a good example. Now, just for, fun, okay? Let's act as if... Let's just say this is that little line right there. Let me make it really, really visible. Where'd it go? See, that's how... There we go. Oh, it's just way up there. Okay, we'll go in. We'll make this really... Okay, so this line. Let's act as if that line is expiration. Okay, like that's going to be the 9 a.m. expiration. I know it's 9:25, but it's, work with me for a second. And I get a short signal on the 1 minute. I won't take it because it doesn't line up with the 2-minute trend. You see that? Like 2-minute trend, 1 minute. See how that does not line up? I'm not going to take it. I'd be glad, and of course in this case, that I did not take it because it was counter. Now, let's say, right here is 20 minutes till expiration, but right here is 15. Okay? So the 2 minute went long, but it gave me a long signal, let's just say before 15 minutes till expiration. Then the 1 minute turns and goes in my direction. Now I can take it. So basically just the 1 minute signal has to be lining up with the 2 minute signal, or not, it's already in progress. I'm not waiting on the 2 minute. I can take the 1 minute, but it has to be at the same time. Or in the same direction. It has to be correlated. And I'm only using the 1, the 2, and the 3. And we'll be adding more strategies. These are just the first 2 we were rolling out. But I'm only using the 1, 2, and 3 for entries on less than 15 minutes to expiration. I'll use the 4 also, but I won't use the 1, 2, and 3 on entries greater than 15 minutes until expiration. Do the breakout arrows on the 1 and the 2 have to line up? No, just the direction. So if 2 is long, then anytime thereafter in that last 15 minutes, if 1 gives me a long, then I can go. So you can say they have to line up in direction, but not like at the same time on the exact same chart. I mean, that'd be pointless. If they have to line up, then you just take the 2 minute. But I'm thinking you mean just in direction. So, yeah, so this is up, this comes up, and I'm trying to find one where it's more delayed, so it'd be a little better. Here, this is a little better example. Need to make that a default. Do that one more time, but I'll set it as default for the drawing, so I don't have to redo it over and over. There we go. Now when I draw one, it'll automatically be that color. Yeah. All right, so right here, we got a long 2 minute. But then, somewhere along the way we get a, this is at this point right here, we'll say, and we can go back, we'll find a live example, but I'm just trying to, but right there, let's say that's where the 15-minute mark is, okay? So I can't use the 2 minute because 15-minute mark's already passed. And then we get a 1 minute signal inside this 15-minute, window. Okay? So we get a 1 minute inside this 15-minute window here. But that one is a short. Now, it didn't ever break out, so it wouldn't take the trade anyway. But we get a short setup, which means we actually would go and set up our trigger to take an entry, and it just wouldn't have gotten triggered. But we don't take it. We ignore it completely because it's contrary to the trend. I mean, green, red. 2 minutes going long. It's in a long trend. There's a short trend here. It's a long trend here. The 1 minute is in a short trend. We're not going to take it short. We're not going to go contrary on the 1 minute to the 2 minute. Does that make sense? I need green on 2 to take green on 1. Yeah. Perfect. Okay. So we got that down. Okay, now we have the setup and the breakout part. So let me go in and I'm going to open up this little All right, so we don't take the trend trading premium collection on the 5 minute. We don't take it on the 10 minute. We don't take it on the 8 minute. We don't take it on the 3, the 2, the 1. The trend trading greater than 15 minutes till expiration, and we're only going to take on 4 minutes. Okay? Again, we will roll out additional strategies. If you want to test something out, cool. Back test it first before you even post it. Okay? Forward test it in demo. Live to see if it even, beyond theory, can you even get filled. And then, do a few live trades and now go forward. So we did hundreds of trades before we settled on these rules. So you don't just want to nonchalantly just grab something and start running with it and to see what happens. Okay? It's a lot of work to go in and do the research and find out. So the 4 minutes for that. I'll go into the 3 minute again. I'll repeat that when I get the expiration premium collection. But right now, we're going to talk just about trend trading premium collection. So 4 minutes, okay, only. The only thing you could use the 3 minute on would be to give you a heads up it's about to change. So see how 3 minute changes and then the 4 minute changes? Or vice versa? This one, notice how the 3 minute changed, and this is why we wait. Okay, so right here, look at this. See how that one changed? Lost. Okay, we didn't take it. We don't take it because it's greater than 15 minutes to expiration. Right there. Didn't change. It got what's called a setup. We didn't get a breakout. So we never actually got an entry trade. Okay, so we used the 3 minute to help us on our, and you wouldn't have got a fill on that strike up there anyway. But regardless, even if you would have taken the trade, we don't take the trade on the 3 minute, we take it on the 4. The 3 just gives you that heads up. And that it may change, because as we see in the 4 minute, it did not change. We never got the signal. I'm glad we didn't get it, because that trade would have lost. It came back, it hit. Okay? Now here the 3 minute gave us a heads up. And then the 4 minute gave us a signal, and that trade's already taken profit. Okay, we got all the room we needed, and it's still going. But yeah, that's really the only purpose of the 3 minute. Okay, But as far as actually application of it, using it, we'll talk about that on the EPC. Uh, so what would happen? I mean, if I see a 3-minute, I should be over here. So let's talk about, actually putting, things into practice here. I see a breakout, alert. Not a breakout, but an alert, a setup alert on the 3-minute. I should definitely have my scanner up. I should have the settings to 0 to 2 hours already. I should already have the in the money selected. And it says this is going to be a buy. So I'm going to click the buy side. Okay? And you know what it's going to do? It's going to narrow down everything for me on the Russell immediately to the buy side that are in the money trades. Very, very simple. Okay? Direction, which is optional because maybe you're trading a couple different instruments. Okay? But if I was just trading the Russell, in the money, 0 to 120 minutes. That's it. So again, direction, which is optional, in the money, 0 to 120 minutes. Select your instrument, and now you will see the only possible strikes that will work, if there are any, okay, for the trade. And if there's not, guess what? You don't take the trade. You don't want to force the trade. Okay? And then you'll look and see, can I find one within, 2 hours or less? We can go over here and go, okay, what was the strike? So now let's go into actually strike selection. Okay? And so let's talk about entering first before we talk about exiting. Now, you don't want to enter just because you get, the MVP setup. Okay, you want to wait on the breakout for your entry. Okay? But here is a way to do it. And just to make this a little simpler, okay, actually, no, we'll do it just like this. Okay, so let's say, and I mean these are not the right, pricing, but I want to show you a good example. Because we're not when the signal happened. I mean the signal's basically cooked. It's done. But what I would do, and just bear with me on application practice, reality here. We'll go in through and we'll see if we can find some live ones. But we do that in the trading pit all day, so I'm not really worried about doing it on the webinar. But I want to make sure that you do understand how to actually apply it. So it says, setup. It'll say 1093.3. Okay? 1093.3. So what I'm going to do is I'm going to go, okay, well, I need to find a strike that's... Now, this is for trend trading premium collection. Do not confuse this with expiration premium collection. For trend trading premium collection, I want to find that one that is approximately very close. So very close to me means, 5 ticks would be my max, but ideally I want within like 3 ticks. Like no higher than 3 ticks above on a buy. Okay? Of that strike that's given me. No lower than 3 ticks below on a sell. I will go to 5. But I got to really be getting some good premium if I'm going that close. Okay? Because I'm really adding some more risk to the trade. I'd prefer to get 1093.3 or lower. Okay? But I will go to 1093.6. I will not, in any case, go higher than 1093.8. But I highly recommend that you sort of stick to that 3-tick rule and don't go any higher than that on it. And the lower you can get, the better. The further away, the better. Okay? If it's an option of a 1093.8 for 30 minutes from now, or a 1090, let's just say 3.5, not 5, but let's say a 1093. So let's say there's a 1093.8 an hour from now, but there's a 1093 an hour and a half from now. I'm taking the 1093 an hour and a half from now. I'll opt for distance. Okay? I'll get more money and it'll be further away. Now, when I put this trade up and I'm looking at it, let's say this was the trade I was going to do. And let's see, is it pulling back a little? Because it could be helpful if it is. Yeah, there we go. Okay, so we're going to grab that one. Now we grab this one because at least they're close. Okay. And it'll also, we've added the feature to make this easier for you to give you the trigger price, which is technically the trigger price is 2 ticks above the high. So see how the high is 1096.7? Technically, it's 1096.8. Alright, so I want to give you that first, because you'll notice that this breakout won't ever fire off unless it breaks it by 2 ticks. So why do we put the triggered price of 1096.8 when it's really 1096.9? Because the Nadex indicative is reflective, okay, of the average of the last 25 prices, the average of the middle 15 of the last 25. Like trades on futures and of non-simultaneous quotes on mid-quotes on FX. So knowing that, if I wait, it may be at like 3 or 4 or 5 ticks higher before it finally triggers. So I just put it 1 tick above. Okay, so 1096.8. So it's actually telling you what trigger price to use. And so say I pulled up these 2 tickets. Now they're already moving on us, so you can't really sit around, right? I mean, we had this thing down at 85 a second ago. But go over here and click on Use Stop Trigger Function. Okay? And to use this, you got to be a P3 member, an Elite member, or you can sign up for the demo under Scanner. There's a demo access. So what am I going to put in? What am I doing here? Okay? Now remember, I'm doing all this when the setup pops up. I'm not waiting on the breakout. Okay? And I'm going to put that price. So 1096.8. Now we're obviously well past that, as you can see. 1096.8. So the price I would put in. We would have taken profit. Either one of these strikes we chose, we already would have taken profit on them. Okay? But 1096.8. And what that means is when this indicative price, which is an indicative, that middle 15 average thing I was just talking about, of the underlying market, of the Russell, okay? It is not the actual spread quote or binary quote. It is the indicative quote. That's what it says on indicative index. Trigger price on indicative index. So the trigger price is what, when this hits it, it will trigger it. Now we have the market offset, okay, of 10 ticks. And one person asked, it was a good question, why do we use ticks on that? So why don't we just say dollars? Well, because this is for spreads and binaries, okay? So spreads 10, even though, yeah, it would be equal to $10 on a euro dollar, it's, 0.0010. It's not quite quoted the same, okay? So put number of ticks. So it's already there. So basically, I want to, put the thing in at 95. Now, we got our worst limit, okay? Our worst limit. Now, how high would I be willing to buy? Okay, I do not ever want to buy higher than 85. This is a very important rule. Nor do I ever want to sell lower than 15. So if you can't get me filled for 85, then don't fill me. Just put a working order out there until you can. Okay? So let's say if it flies up and the quote's at 90 all of a sudden, it'll submit an 85. Because 10 ticks higher than 90 would be 100. Or if it's at 87, 10 ticks higher would be 97, So make sure you put that in. Now, if you're not sure if you have it right, okay? And again, if you have any questions about this, you got to contact us. This is we're not submitting a stop order. We just have a trigger function in front of the ticket, so you can use it. You can tell the trigger, when do I want to submit my limit order? That's all it's for. Okay? So, It's just a limit order that you're submitting. It's not a different order type. It's just saying, hey, when do I want to submit it? If you have a question about it, click explain. When the indicative index, now it's going to say falls to because I put the price under. Of course, you normally would say when it rises to because I put the price above on a buy. Automatically submit a buy limit order for one contract at the minimum of 10 ticks above the current offer price when offer size reaches one or more with a limit of 85. And when I say offer size reaching one or more, it's going to make sure it's at least one when it submits it. Okay? Like there's a one right there. We're the last, Yeah, it's just so deep in the money. That's why there's not many quotes right there. But there has to at least be one or it's not even going to submit my order for me because you don't want to get hosed on just a bad, market being wiped out. You can make that number higher if you want to be pickier. Just understand it looks at top tier. So somebody has an order of one in there, it'll hold on to it until it sees that that number goes up. Okay? But it's pretty simple. Trigger price, trigger price. I usually use the defaults of 10 and 1 and 1. It's up to you if you want to get all fancy with it. Okay? I will put a worst limit of 85, and I'll put a worst limit on a sell of 15. So, trigger price, worst limit, submit. I mean, that's what you do. Now, notice I opened both. So I opened up the 11, and I opened up the 12. Okay, now, of course, I don't have the 10s because it's already passed. But I'm going to open up current hour and next hour. Okay? And then I'm going to say, activate my, stop trigger function. Okay? So now it'll be stop trigger function is active. If you close the window, if you log out of Nadex, if you, basically if you do anything besides just leave it open, it won't work anymore. Because it's just a function, okay? It's not an order type sitting on a server or something. Anyway, so right there, that's working. Now, why do I have the second one up? Because sometimes what will happen is I'll see that by the time it took, because maybe it'll take 30 minutes to get there, it'll hit it and it'll pull back. I mean, this one happened right after. But, a lot of times it'll pull back and it'll take 30 minutes, and then it finally breaks out. And I look at it, and the problem is there's been so much time decay already in that binary. By the time it breaks out, the thing's up at $92, okay? And so I'm like, well, it's going to submit, but it's not going to fill. But look at this one. This one's at, let's just say it was at 70 or something, okay, or 80. Then I go, okay, well, I'm going to go ahead and, cancel this one because I can tell that if this thing breaks, I'm not getting filled. And I'll just hit amend deactivate, and I'll flip over, and I'll activate that one. And I don't have to go searching. Okay, I know what acceptable strike I would use. So this is about being very practical, having both tickets up, being ready. Not sure what you see, Mark, or what you're saying. So now, if you do get filled, so let's say I'm gonna. By the way, let's say it's like you pull it up and it hits it. Okay, let's go into that. You pull it up and the price just gets nailed. Okay. And we go in and I'll use a limit order. Okay, so I mean, I didn't even get to the stop trigger. The thing already broke out. What am I gonna do? I'm gonna hop in the trade. So I'm gonna grab it. So, we go and we grab it real quick. We put it in there. Order received. Okay, it's in. All right, now, I know I bought that higher than we normally would. But what I want to show you there is, if I don't have time to get the breakout, I'm not going to set a breakout trigger. If it's broken out immediately, I'm going to go and I'm going to set my limit. Now, what should I have set my limit for? Who can tell me that? Versus just grabbing it. So yeah, at worst, I should have set it for, right, exactly 85. Okay? So, perfect. So, not 1096.8, my limit. Okay? I'm not buying it to 96.8. This is a binary. So, buy no higher than 85. Okay? Right? So I could go in, I could submit that at an $85 price level. Uh, but what I can do is I can see my working order that's out here. Okay? And we still got long, so I'm not really worried about it. But I wouldn't want to go in and take a trade for $6, even if it's going to win, because I'm going to pay $1.80 in fees. So now if I'm doing 100, of course that changes, but still, it's just not worth the risk. But yeah, so I can see my working order there. Okay, so if I see my working order is just not going to get filled, that's when I may want to activate this one. Right. What my whole point was, if I go in and the breakouts happened, if the breakouts already happened, okay, I don't need to use the virtual stop trigger. So I just need to go in and put a buy in for no higher than 85 and no less than 15. Now the virtual stop trigger definitely hasn't happened yet. Which, like on this one, you would have had you had a minute or so. It opened up, it came down a little bit, and then it moved up. So you had a couple minutes to put that in. And that you definitely would have used 1096.8 exactly. So does revert to limit order mean that you're just changing it back to a regular Nadex ticket? Either way, you're still doing a regular Nadex ticket. Okay? Revert to limit order just means that you're turning off the stop trigger function. So both of them are regular Nadex limit orders. It's just, when do I want to submit one is like I have to be there and I have to manually watch and wait for it to hit, and I put in 85, and I'm watching, and when it hits it on the breakout, then I hit placeholder real quick. So, whereas I have to sit there and watch it, I could do that. So I'd put no higher than 85. So, I mean, if it's at 78, I'll take it, But I'll put no higher than 85. Perfect. Yep. Question. So, we want the 1, 2, and 3 minute bars to be in the same direction before taking a 4-minute trade. Nope, that is not accurate. Did not say that. So, I said you could use the 1, 2, and 3 as a heads up on the 4-minute. I did not say the 1, 2, and 3 have to line up. I said the 1 minute must line up with the 2 on an EPC. But I never said the 1, 2, and 3 have to line up on a 4. Okay? They will a majority of the time. I mean, you can just sort of look at them. But, 1, 2, 3, 4. And if sometimes it seems like, why would you just take the 1? Well, it sounds simpler than it is. So, like right there, 1, 2, 3, 4, you would have lost on all of these on the 10 a.m.s. But there's only one of them that didn't trigger the 4-minute one. You got it here, 1, 2, 3, 4. Hey, all of them would have won. Great. 1 minute went short, and still has 30 more minutes to go, and now it's got a long again. So, right. And so what I want to do is I just want to make sure I clarify it. And, no, that was a perfect question. When I take the 4 minute if the other 3 were red, I'm just going to say yes to make it simple, but that would never happen. So, like if 4 was green, the other 3 were red, would I take it? I'll just say yes, I would take the 4 minute. But you'll never see, ever, that the other 3 will be 1 and it'll be other when that signal comes up. And I guess I should always say maybe 2 out of 50 or 2 out of 100 or something. Throw myself a little probability curve in there just in case never lines up. But In the markets, it has a habit of proving you wrong when you say the word never. But you should rarely ever, ever see them not line up. But I'll just take the one. Let's see here. Okay. I mean, here would be an example. You got a 1 minute that flipped, a 2 minute that flipped, a 3 minute that flipped, and the 4 minute didn't flip. You know, and you may have got. Here's what may have happened: you may have got a 4 minute sequential short. Like you may have got a 4 minute additional short under it. And it's not a horrible question because it makes sense, and I guarantee you, some of the worst problems I have in helping traders out, which I'm glad when you ask questions, like this, is they make assumptions. And they're like, it's amazing. Like, I mean, in Elite, and we got a lot of them cleaned up just over time by redoing the videos over and over and over again to find out what are all the assumptions that traders make. Because they'll go in and they'll make assumptions like, okay, well, if he's looking at 1, 2, and 3, to sort of give a heads up on 4, then 1, 2, and 3 must line up. But I mean, that just is an assumption people make, and that's like, well, that's not what I said. But so it's good. It's not a dumb question. It's a great question. But what? These are why these assumptions come up. Because they see the 1 go long, they see the 2 go long, they see the 3 go long, but then let's say that you've got a 4 minute short. Let's say a little, arrow popped up over here. Like right there. Well, can I take that trade? The 1, 2, and 3 are showing long, so I can't take that one. Like that's what would come up in a trader's mind. And it makes sense. I get where the assumptions come from. But we really do, like, when we say this is the rule, it really is the rule. So we try to keep it as simple as possible. So the answer would be yes, I would take that trade on the 4 minute. There's multiple reasons, but one of them is the overall trend. Second one is the 1 minute hasn't broken out. The 3 minute hasn't broken out. The 2 minute, I mean, it basically just broke out by a tick and pulled right back. And then all of a sudden, boom, we'll get that 1, 2, 3, flip right back, and it keeps going down. So, but no, thank you for bringing that up, because that's often, an assumption a trader could easily make. Let's see here, and I got my little list of things I'm going into. You can take, you can take additional sequential entries. Okay, so that's like, where you get a short, then you get another, like you get a short there, and then you get another short there. Here, you didn't really get a sequential. You don't get as many sequentials on 4 minutes as you do like on 10s and stuff. But anyways, okay. Next step to go into. What do I take profit at? Okay, remember I said like 85 and 15 being my worst? I prefer 80, closest to 80 as possible and as close to 20 as possible. Here's why, or even better. I really want to get out of the trade before expiration. I don't want to depend on that last 2 minute dark zone. And now sometimes I have to hold, okay? But I really don't want to put on that 2 minute dark zone, and I want to free my capital up for another trade. I'd rather make $15, be out of the trade, put another trade on. And, I mean, like right here, you got this trade, you could put this on. You take profit on the trade, time goes by, whatever. This trade doesn't get triggered. This trade, you put this trade on. Take profit on this trade. So I'd rather go in and, instead of trying to wait for $5 more, okay, I would rather go try to make another 15 or 20. So, and it's basically cost of, time value. So I'm staying in it for a few more bucks when I could be making $15. I want to get out of the trade. I will usually look to get out at least at, like 96 on like if I bought, or I'll look to get out at, say, $4 on one that I sold. Okay, at the I'll buy back at 4. That's sort of my minimum. Like definitely, I'm getting out there. So if I buy at 85 and get out at 96, I'm only making like $11. Not really my preference. But man, the trade out of the trade. I've removed all risk, and now I'm free to go take another trade. Okay? I prefer to get out at 92 or at 8. And the reason is, and what I'll really do, the best method that I've found for choosing what price to exit at is I'll go up here and let me reset the filters on this for you real quick. And I'll look at the pricing ladder. Okay? And I'll pay particular interest to like what's out of the money or whatever, and I go, so what are they pricing at? And notice how, let's say I wanted to buy back at 5, okay, versus buying back at 8.50. What that tells me right there is it would take, I mean, this is weekly, so it's not a great example, but it would take 6, like if you were doing a weekly, I mean, it's a good example for displaying the point dramatically. If I would, like, you know what, I sold this thing at 70, I want to buy back at 5, that means I'm requiring the Russell to move an additional 6 points, 6 whole points on the Russell just to make $4 more. Okay? So, you know what, I'll give you, they can have the $4. I'm going to get out 6 points earlier. And we can go over here and do the same thing. Let's say I went in and I, bought at, let's say 65. Okay? Like right there. And I'm looking at a sell over here. Well, I could sell back at 96, 94, 92, 88. Which one would you rather do? Okay? I mean, think about this. All right? This is, if I got out at, 96, well, 2 points closer, I can get out at 94.50. That's a $20 profit, okay, with 2 points left that the Russell has to move. 2 more points closer, I give up just a couple of dollars, and I'm still making $18 on the trade. Well, that's more than acceptable to me, okay. We go a couple bucks closer, and at a certain point you start giving up, but I'm at about a $15 profit, and now I'm 8 points closer than that $96 profit target. Okay? So, yeah, bottom line, I'm basically looking at about a $15 to $20 profit goal on the trade. Sometimes it will have to be less. Like, you get filled at that 85. And I'll see some traders, they'll just hold them. They'll watch them and they'll just hold them. But, especially as you start trading more markets, you're going to want to close it out and so you can go take another trade. Because, I'm holding on to this trade to make $5 more because I bought the thing at 85 and I think it's stupid to sell the thing at 95. But then I see a great $70 buy over here on the USD yen. But I'm going to wait for I don't have the capital, so I'm going to go ahead and just wait on that extra $5 before I make the 30. I'm going to give that 30 up. That doesn't make any sense. So another good question that comes up, and obviously I was answering this question as I was talking, but like I was actually answering your question. I just didn't state your question. So, question came up: what if I bought at 65 long? Would I still hold the 1995, or I would get out for a $15, $20 profit? Personally, I'm still going to get out for a $15 or $20 profit. You can stay if you want to, but would I rather wait for 6 or 8 more points of movement? Now, it may only be like 2 more points of movement, as you get closer to expiration, of course. So this whole, difference will be smaller and smaller. If I bought this at, 62, 94, 93, 90, $15 right there, I can get out. We're talking about, 3 more points. May not sound like a big deal, but on a small, like 4-minute time frame, 3 points is a pretty big deal. And it's all about booking that profit and moving on to that next trade. So obviously with risk management combined. See up here, like I bought it at 93.50. Well, it's at 96. Well, I said at worst case 96. We didn't get filled on this one, so we got to go over here. We got to cancel that one out. We got to put in. Still does that reconnect thing. We we're going to fix that. At least it automatically does it for you now. And then get everything in my way. So now let's just book the profit. Okay, we netted 70 cents after $1.80 in fees. Okay, so but I was just obviously throwing that on for just an example. Yeah, woo! I can buy 2 tacos, Taco Bell. Maybe 1. Actually, 70 cents. Okay, so we got that in. Now, let's look over here. And a positive is a positive. A win is a win. Woo. Okay, let's see here. Let's talk about stops, okay? Because that's more important than pretty much all of this. So I'm just going to grab a trade over here. And that's the problem with doing on-top charts. It's nice because I don't keep sticking my chart in the background, but it's a pain because my ticket keeps popping up right there. Okay, so I bought this one. Or I put it in and it went into working limit, which is probably what just happened. Yep. There it goes. Okay, got in it. Okay, I went in. I'm like, okay, I'm at 78. Where am I going to take profit at? Okay, well, $20 would be 98.50. Okay, well that's not even going to happen. Okay, so $15, 78.50, 88.50, 93.50, something like that. And so, by the way, I mean, don't be afraid to use a calculator. So 78.5 plus 15 equals 93.50. Okay. So that's $15. So that'd be basically like my $94 one. Okay, we're talking about. So I can go for 94, or I could go for 91. So I may decide, no, on this one I'm going to go ahead and just go for 94. I mean, we're talking, 1 point in the Russell. That's okay. And so I go in here, and I'm going to set my take profit on the trade for 94. But that thing be working for me, okay? Or, I mean, I could just do 93.50, I guess, if I wanted to beat it to the punch there. Okay? So now I got my take profit working for me. Now we need to talk about risk management. And I've been working on this with a couple of traders, just going through like the best way to lay it out. And basically what we've come up with to simplify it there are 3 methods. And we have what we're doing a conservative, we're doing a moderate, and we're doing a aggressive. Okay? So conservative, a moderate, and an aggressive trade. Style of risk management. And you got to choose which one you want to do. In all cases, you will definitely end up at the conservative style. Now, I'm going to stick to MVPs right now. So, what is the conservative risk management model? Okay. Somebody set off a sound. The conservative risk management model involves simply trailing your stop on the offset line. So see where this offset line is? This dashed line. Okay? See the reading right there? 1102.3. So I go in, I hit this little stopwatch icon, this little stop icon next to it. And put it up here. This is 1102.3, so I could go in, and this is the most conservative. This is the most likely to get hit. Okay? It will lower your risk as the market's moving up, but it will also, it will be moving itself very close. So 1102.3, and then I can just put, worst limit, like, say, 40 or something as a stop. That's usually what I put in. And then hit activate stop trigger. And every 4 minutes, that line is going to update. And I can just sort of watch it, and once every 4 minutes, I can amend it. And sometimes you're every 4 minutes. But where you can sit there for the entire 4 minutes manually and be holding a finger over a button on a limit order and just waiting and waiting and waiting and waiting and waiting and doing this for hours. I'd rather just stop once every few minutes. And I mean, if you miss it, at least you have one there. Maybe you're reading your email, you're looking at another chart, whatever. So, alright, so does that make sense? Any questions on just the conservative stop method and adjusting it once every 4 minutes? Can you show where the video is on how to activate the stop trigger function? Yes. Simply look at the help and tutorial section right here. Let's go over to help and tutorials. How to install and activate the auto Nadex ticket plugin. So we got it for Google Chrome, Firefox, and Explorer. The stop trigger function only works in Google Chrome. So you will have to use it in Google Chrome if you want to use that function. I do not recommend using the scanner in Firefox or Explorer. We paid the money to make plugins for you, but the reality is Firefox has memory leaks, Explorer has security issues, and as a memory hog, you want to use Google Chrome. It is faster, it is more secure. Once you've installed it, as long as you have access to it because you've activated either the demo under the spread menu in the main website, or if you're a P3 member, or if you're an elite member, then you'll simply, anytime you open a ticket, you just click on the stop trigger function, and it won't be there unless you are. Like, unless you're a P3 member, an elite member, or you've activated the stop trigger demo, again, under the spread menu, in the under the scanner menu in the Apex member website, you won't even see this. Okay? So, when you click it, then you just, fill in the information and activate stop trigger. I went over that in a lot of detail a little earlier. So, but we got it all in the recording. Let's see here. And I'm just sort of going through the list. I want to make sure we cover everything. Yeah, I think the euro dollar woke up, huh? So that lets me bring back my previous point of looking at 11 a.m. Let's pull that up and look at it. Real quick while we're on here. So we were looking at pound dollar. And we were looking at euro dollar. We got that one working, by the way. So pound dollar. We're talking about like a 6 a.m. entry. Just way back. Let me get off a diagnostic chart. I didn't mean to pull that up. We'll go back and look at diagnostics here in a minute. But where is? I had a chart up just for. Okay, yeah, I was just using this. Okay, there we go. So on the, I had the 510. That's what I had up, wasn't it? Where is my 510? Okay, here we go. Now, let's look at how far it's moved. Since 6, we haven't had as much movement. We've had a lot of movement over on the euro. But it's picking up. I mean, we're at 48 now, okay? So versus like 30 earlier. Like I said, it could take a little time. The euro... I think I accidentally clicked Aussie. Yeah, the euro is going nuts. You want to see that one on MVP? Okay, cool. We'll do that. Oh, I bet it. I chose Aussie, and remember I said I just updated my Ninja, so all my default 24/7s aren't set. So now I gotta go to Instrument Manager, odd USD, search, click on it, notice on the other screen. Just update that session template to default 24/7. So I won't ever have to do it again until I update Ninja. And now to reel in my data. Alright, so now we'll go over here. Yeah, every once in a while, most of the time, it's fast. But, you know, that's why I always talk about more time is better, especially if you can afford it on the spread. And I don't mean like you can afford it. I mean, you know, it's within the expected move range in the risk-reward model. Also, you can show your stop a little bit too. So, and I'll show you how to do that here. Once we get it up, we almost got it up. Come on, I know I set these. Because we already had this instrument up. Okay, so like looking at like the 5 and 10 minutes, I mean like the 5-minute bar is actually a pretty cool way to trail it, Darby. So you're in, you could actually use this as a way to trail. And eventually, you know, you might be like when it closes below. It's like right here. Now you might be looking to get out potentially on the trade. You know, on your news trade. Doesn't mean it's not going to keep going up because I mean your trend isn't over yet. It hasn't turned around yet. But you could also just wait for it to flip if you wanted to. So until we got like a short, you know, setup sell. If you really want to maximize profit, that would be a way to do it as well. MVP in the news. Exactly. So, but yeah, I mean, we pretty much didn't get any additional movement above what we already expected. You know, this isn't new. I mean, because somebody asked me to analyze $0, but I'm like, it already moved that far. So we're just, I mean, it went to a 1 deviation level. I mean, it's an exact expectation of movement. It's an expectation of where we should expect the market to get a little choppy. Okay. If I go on, and Ben is waiting to show me the new version that hopefully we'll be releasing soon. already have it on there. Yeah, I'm surprised we don't have a. Surprised we didn't get a volume spike on this. That big move, we actually didn't have a volume spike on euro dollar futures. So the volume spike actually all happened here earlier. It's like there was a lot of dumping and like they were forcing this thing down to pull it up. I mean, there's some market manipulation going on, pushing that sucker in the opposite direction before they ran with it. But notice there's no big market spike. We haven't seen. If we would have saw a big volume spike here, I'd be pretty, I guess, inclined to be a little more concerned. Another thing you can do is sort of a pain, because if you start to flip to non-euro charts, but is that you can go in, you can add in like 6A, 6E, what 0314 is a data series, and make it minutes, make it 10, and make it transparent. Click OK. And then I'm going to add in another volume indicator up here. I'm going to assign it to the 10-minute right there. And say save as input series. Click OK. Now I'm seeing the euro dollar futures. So yeah, I mean it was a high volume bar. Okay, so there we go. Actually, we did get some. It wasn't a volume spike. That's a little clearer to see. All right, so let's do some analysis on this. All right, we have a couple of possibilities. If the euro's gonna fall back, okay, then I'd expect a large fallback, not just a moderate pullback, because of that big spike. So I would probably be looking at, if it's going to fall back, then I'd actually be targeting like the low of this bar right here of 1.3482. So, combining a couple things together over here, we need to cancel that out. Combining a couple things together, then let's go down, let's look at euro. Try to bring in something, we already got the MVP rolls down. I know this is a little more off topic, but that was a monster move, wasn't it? Bring it back up here. Thursday mornings are open, so yeah, they won't just be locked down usually to a single thing. But I love it what people call like right in the middle of Thursday morning webinars. They wonder why I don't answer. Okay, let's see here. I'm talking about the apex line, not my number. Alright, so just to verify that price over here, let's look at it one more time. We haven't flipped yet. You need to remember that. Okay? But if you're expecting a pullback, 34.82. Okay, want to verify that price. So I'd go down here and I'd look like at basically trying to find that strike. Like, what am I missing, right? Okay, here we go. We have to go way out here to find this. Okay, look at that, 34.80. It's like 96 bucks, which is awesome. I'm not obviously going to take that one. Why would I? Because I can get higher ones for 96. So we got higher, 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 higher. We go down here, 35.60. And I have another 4 hours for the exact same price. So I take the 7 o'clock. Let's go up further. 35.60. Now we're up to 88.50. Go down here. This is going all the way to Friday at 3. 35.60. Now we're like at 84. So, I mean, if you wanted to hedge on a big pullback, though personally I would wait on a reversal signal. Because that would, I mean, it's just going to take a while. That's a big monster move back. But if you want to throw on a hedge, let's see, who put that question in here? Trying to find it. So yeah, John, so if you wanted to hedge the euro dollar, then a very cheap way to do so would be to sell a $95, 35.60 right here, and then set a buyback like at 57. And you'd have until 7 o'clock tonight for it to pull all the way back. Okay? But there's a lot of strength in the euro there, so I don't know if that's, if you're just throwing money away or not. But if you want to hedge, that would be how I would hedge if I was really wanting to hedge this trade. Okay? Yeah, as far as the news trades tomorrow, yeah, tune into the show. That's what I spend the entire radio show doing. And then also, listen to yesterday's. I mean, I go through it every single day on the radio. So that's definitely the place to go for news. You'll see about half of what I talked about on the webinar today on there, because I'll be talking about the pound and the euro, and I'll be redoing this. But I'll also talk about tomorrow. And so you took a short on the USD above the maximum point of that move. So yeah, basically, so you did the same thing. Yeah. The strategy on the pound dollar interest rate, Kelly. I hope you were on at the beginning of the webinar, because I talked about spreading it across euro dollar, pound dollar, euro yen, pound yen. I also talked about looking at strangles, so you have more time. So, and not just putting all your eggs in one basket. So yeah, Kelly, so you'll have to go back and either listen to my show or go back and watch the recording of the webinar, because I already covered the pound dollar interest rate. So we spent like the first 30 minutes going through that. Let's see here. You're probably coming on from West Coast or something. You put it on and went to sleep. Went back to sleep. That's my guess. I thought I saw a question from Heinz. But maybe I didn't. Let's see. Oh, Nadex trading for Europeans yet? Same thing as always. Waiting. 30 days. So, tell weird differently. Okay. So everybody has the conservative method down, all right? You understand that conservative method. Any questions left on the conservative method? You simply trail the stop using the dashed line, okay, on the 4-minute bars. All right, no questions on that. That I can see. Let me check the other room. Nope. Okay, so the next question we got, the next step we have is, okay, what about the other two methods? So sort of coming back on topic here. That's why I didn't want to look at euro dollar, because I knew it was going to be at this big interruption. But we got it up now. Okay, so we got down the conservative stop, moving the stop with the offset line or predictor, whichever is a closer choice. Okay, now you could go in and go, well, I'll use the predictor or the offset, whichever is closer. Obviously, that's just going to make it a tighter stop. It's going to get you stopped out a little sooner. Because eventually, they can, you'll see like right here, the predictor finally does cross above. Predictors, these little arrows right here, these. Finally does cross above the offset line. So a little bit tighter method. A little more loose method. Now these are all still within conservative model, okay? Is you could use the predictor. You could just say, I'm going to use the predictor, give it time. Now it would start off obviously very risky, but I'm talking about I'm talking about more versus the strike. We'll talk about that in a second. But you could say whichever one's further away. So I personally think it's easier just to go with the offset line. But you can use offset or predictor or whichever's further, whichever's closer. Put all those in one basket. That's your conservative model. Okay. Your moderate model, and by the way, when I say conservative, and when I say using the predictor line or using the offset line here, what I'm referring to, and yeah, I'll blow the chart up a little bit, make it easier for you to see. I mean, of course, you can have this chart on your screen, but when I say using, these lines right here, like, so I'm going on and I'm following this offset line, this little dash line. I'm talking about when I say, and I reference that as conservative, I mean at or above the strike that I bought. So if I brought the 35.25, so like right here, here's what we bought, okay? Then what that means is, as soon as the price moves up, I'm going to, like as soon as this dashed line or these predictor arrows, either one, start moving higher, I'm going to, keep either moving with the arrows, or I'm going to keep moving with the dashed line. Or I could move whichever one is closer, like see how the arrow starts surpassing it. Or I can stay with the one that's further away. Okay? So I could start with the predictor and end up on the dashed line. I could start with the dashed line and end up on the predictor, whichever's closer, either way. But in all cases on that, I am kicking that in on the conservative method after that line has surpassed my strike entry, which was right there. 35.25. You can see 35.25. Okay? That's the conservative method. The moderate method of risk management is I am going to leave, I'm going to leave my stop at my strike. Okay? So I'm going to leave it at 35.25. And I'm going to set my take profit. And either one or the other is going to get hit. Okay? Benefit, you're not going to get stopped out as much. And your take profit's more likely to get hit. In the sense of versus your stop getting hit. Because you're not, obviously the closer you trail your stop, the more likely your stop is to get hit. Okay? So by leaving it there, you give the market room to wiggle. All right? Wiggle around and do its thing. And, yeah, exactly. LMFAO song, wiggle, 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 right? So give the market time to do its thing. And it's funny. Um, but you'll take on, you're not. I mean, like I did a trade last Thursday. We put on. It was a really small trade, but we went in. We trailed it, and we only lost $1 on the trade. And we would have lost like $20 on the trade, per contract if we wouldn't have. But there are many a times where you only made $5 or $10 in the trade that you could have made $15 or $20 in the trade had you just left your stop alone. Um, okay, so pretty simple, moderate method. I'm going to put my take profit. I'm going to put my stop trigger in there. One of the two is going to get hit. When one gets hit, I'll cancel the other order. That's it. uh, just an idea. When the lines come together like that for a certain amount of time, would it be a good idea to butterfly? Yeah. So that definitely is, you're seeing a sideward trend. So that could be something you could definitely look at. Good idea. Now, I'd probably be more inclined to do that looking at a 10-minute than a 4-minute. So like over here, when I see these lines go sidewards, that's where I'd be more inclined to do it. And then you can look at that range of that high to low, what you think is sidewards. I completely agree, Darby. Because the 4-minute can go sidewards and then turn like on a heartbeat. But maybe you could try it out. I mean, it might be a really. I just honestly I haven't tested it on the 4-minute. So, but I mean, yeah, you can definitely see there's some solid like butterfly money to be made. The thing being sidewards, and this is sort of confirming because I mean you're not seeing it move up. You're not even seeing it flip back and forth. You're just seeing it just stay there. So yeah, I can see that being a possibility. I haven't tested it, but dude, test it. Let me know. See how the 4 is breaking down. We'll see if the others do. Um, check this. Just 1 second. Okay. Um, seeing that start to break down potentially, so I'm going to throw that on there. So now I'm putting on the hedge because I see a very high potential breakout to the downside at this point. see that's when books getting taken out. Um, okay, so if that does go down, that'll be a nice profitable trade. We did that exact trade on. I did that trade on silver like 2 times this week already. That worked out well. It pulled all the way back like that. Okay, sorry, I just wanted to look at that. Now, let's see here. What other things we have? Okay, so we got the aggressive model, or we got the conservative model down. We have the moderate risk model down. Now we need to go into the aggressive risk model. Okay. So, what is the aggressive risk model? And I sort of said the aggressive risk model before. I talked about that being like right at the strike. But we wanted to really like, I guess, further differentiate. So that's why I wanted to go ahead and sort of redo that and lay it out there. So we got conservative, following the volatile trend line or predictor line, maybe whichever's closer, whichever's further, whatever. But I don't really care as long as I'm following it, one of the two, as it's moving up above my strike. Moderate, put it at my strike, leave the other one on. But before I go into aggressive, the one thing I will say is, if I'm doing the moderate risk model, and I see the 1, 2, and 3 all give breakouts going the other direction, I'm going to flip to conservative. Okay? So, and by the way, this applies to both both models. Okay, to the moderate and the aggressive. So see up here how my 1, 2, and my 3, I got a short with a breakout. I got 2 with a short and a breakout. I got a 3 with a short and a breakout. Doesn't mean the 4 is going to break out. Okay, I've seen it many times where it has not. But, okay, I mean, it just did. But I'm gonna tighten this thing up. So when this happens right here, I'm tightening up, which probably means I'm out at this point on the trade. Okay, if not, I mean, you would have been out way up a long time ago. But I'm out on the trade. So if you haven't already got your take profit filled, and you still got your moderate, stop in there, and that 1, that 2, and that 3 flip, I'm going to go to conservative right away. And if it means it's at that price, I'm just going to get out of the trade. If it's not at that price yet, fine. I'll wait till it hits it. Okay? If my 4-minute flip, which 1, 2, and 3 should have already happened before then, but if my 4-minute flips, I'm also going to look at probably getting out of the trade. Okay? If 1, 2, and 3 are going in the opposite direction and 4 is going in the opposite direction, I'm going to get out of the trade. Okay? So, and again, it doesn't mean that it's always going to be ideal for my exit, take profit. What it means is, things aren't lining up, so let's just move on. Okay? Now let's go to the aggressive model. And I am going to put up front, big disclaimer, this is definitely more advanced. Okay? Staying with the predictor line. Okay, like not the predictor line, but the predictor line would be like intensely aggressive. But it is possible. So you could basically have 2 different levels of aggressive. Sort of like you have the predictor and the volatile trend line for 2 levels of conservative. You could also have the predictor and the volatile trend line for 2 levels of aggressive. And the aggressive being that I'm actually going to use these initially. Okay, instead of using my strike initially, I'm going to use either this one or this one initially. I probably would not recommend using the predictor line initially because you're just going to you're going to lose everything. You're going to lose all 80 bucks. Okay? This aggressive model only applies when you have greater than 45 minutes to expiration. It does not apply if you have less than 45 minutes to expiration. Okay, again, it does not apply if you have less than 45 minutes to expiration. Everybody got me on that? And so this is not the greatest example because, I mean, it would have worked so perfectly, you know. Um, but if I go over here and I look at this and I go, okay, so how would I do this? Then what I'm looking at, and I actually did this, if you want to see an example of it, look at Thursday night's webinar. I was sort of hoping it would lose because I wanted people to see, like, you know, being riskier, but it worked. Trying to find, like, just a really good example of it. Like the application method here. Okay, this would be an example of it on this big, you know, spout of time right here. So let's say I get in on this trade. I get a breakout, I buy. But my stop for moderate, right, would be right here. And say like it went sideways. This is when this comes into play, really. It's when when it's trending, it's easy. It's when it goes sideways that it's difficult. The market's just sideways, just nothing's happening. So my volatile trend line isn't really moving up. You know, my predictor line, it moved up pretty quick, but, you know, I mean, that would be like using your predictor or volatile trend line, whichever's closer method, okay? So you might have grabbed a few bucks on that if you were using the predictor. The offset line hasn't helped you at all, because it's always going to be 5 ticks off the volatile trend line. So since it's been sideways, at least that predictor thing's moving. So the predictor is going to help you out if you're, you know, using a conservative method, but if you're using a moderate, you got stopped out. Okay? Then you got in again over here, and guess what? You got stopped out again. So the market's just chopping. Okay? Very, very frustrating. You get in again, using your strike, and guess what? Probably got stopped again. Okay? 3 times, and it flat market. Now, this is all assuming that you never took profit. Okay? I mean, time alone could have burnt the thing out. Easily does happen a lot. Okay? But what I'm trying to line up for you is just go, let's just look at sort of a worst case, and this is also, you know, this is like a 2:30 to 6:30. And what's going to happen? Okay, I want to bring this up. What is about to happen? This is 6:30 this morning. What's about to happen? Who can tell me? 6:30 this morning. I'm looking at euro dollar. What is coming up? Not the U.S. Open. U.S. Open's happening every morning. Yeah, the euro interest rate is about to be released. What's my favorite time to do butterflies? If you've ever heard any of my videos, you know. What's my favorite time to do butterflies? Right before the news. Why? Because of this. Okay? So I should not be shocked if I'm doing MVP before the news and the market's just going up and down 10 ticks. Make sense? Like, I really shouldn't be expecting a trend right before the news. So I might go with the more aggressive model then. Because I'm expecting it to just move up and down. Okay? So that might be a way. I'm trying to just, you know, teach you things that I see and try to put all that stuff into words and get it out there. But, you know, that might be a time when you'd be more likely to go with it. You know, flatter times in the market, flatter times a day. That'd be a time you'd be more likely to go with it. You know, more trending times, probably don't want to go with the aggressive model, like at 8 a.m., 9 a.m., 10 a.m., 11 a.m. You know, that one, you better stick to the moderate. Okay? But as far as, certain hours at night that are really flat right before news, yeah, definitely, like, would be worth your consideration. Okay? Now, the problem is, if I have my stop down here, it's below my strike. I could lose more than just $25 on the trade that I'm trying to go make, 15, $25 or whatever on. But it also has time to come back in my favor, which happens a lot. Okay? A lot more often than not. And again, I do use the rule on I have to have 45 minutes left. At 45 minutes, I got to go at least a moderate. Okay? So the reason I say that is because then this is going to go from 50 to 5 in like 5 ticks. So I'm going to get just demolished. That's why I have that. You can only use the aggressive with greater than 45 minutes. That's my personal rule. You want to modify it, do so at your own risk. That's my, do all of it at your own risk. But that's my rule. So what I'm looking at is I go over here and it's moving. And I look up and I, go, look, the 1, the 2, the 3, they're all long. And then I go over here and I'm like, okay, let me pull up the 5 and the 10 as well. And we get over here. Okay, so by the time I get the signal, so now I'm getting a long on the 10. I'm getting a long on the 5. I got a long on the 1, 2, and 3. I'm comfortable with a conservative stop. I mean, 1, 2, and 3 line up. 5, 10's lining up. I mean, I have a lot of things saying long. And so I don't know how aggressive I really need to be at this point. Okay, well, the 1 flipped sort of, but it actually didn't give a breakout. The 2 flipped, it didn't give a breakout. 3 starting to show a potential predictor flip, but never even gives me a setup. I'm comfortable with that. I hope this makes sense. I don't want this to feel like it's all like oogly googly, follow the mentor, only he can see it on the screen. I hate that crap. Because I remember trying to follow those guys and be like, I don't understand how you see what you say you see. I see that you think it makes perfect sense. I hate that. So I want it to be something you can actually see, like easily see. Green, 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 green. Okay, well, I'm cool with conservative. I'm cool with aggressive. They're bright green and bright red arrows, very easy to see. So, but I don't, y'all know what I'm talking about if you've been around trading for a while. You got those guys, they're like, it's right there. And you're like, well, if I look backwards, I can see it. I want you to be able to see it forwards. So, live, I guess. Forwards would be even better, but at least live. So I see all that. Now I get over here, and now I got the 1's long. The 2, it's short, but I mean, and also look at it. Don't just, and I try to make this as easy as I can because I don't want you to feel like you have to be all super chart wizard here. But, I mean, look at this. I mean, we're flat. Look at the 2 minute. Okay, I know it broke out, but it pulled right back on the very next bar. I mean, how strong do you feel about the breakout? I mean, on the 3 minute, I mean, it worked, but it's not like the thing's just trending. Okay, it's flat. Yeah, we got a down arrow, but it's just flat. Same thing on the 2 minute. I mean, down, then we're getting this up, down on the predictor. The 1 minute, it's long, it's short, but what is it? It's flat. Okay? So, are y'all seeing that? I know some of you are newer to trading, but I mean, is that just obvious how flat it is? My 5 minute, I got a short, but look, nothing happened. Like 1 bar broke, and then it just went right back. And it's done nothing. My 10 minute's still long, by the way. By the way, this helps a lot. Okay, this is the main thing I was looking at the other night when I was doing that trade on the Nadex webinar was I was actually looking at my 10-minute. Because that's my bigger overall defined trend. Okay? And now notice my 10-minute starts going warning, warning, warning. I know that thing's about to flip. When that thing flips, it usually flips, especially after a long trend. So I got to be very careful. But then I get a volume spike, and then boom, now we flip back. So there's a lot of cool things you can look at and a lot of things you can add on. But the one thing I want you to really see is, why would I be willing to go with the aggressive model knowing I have more risk? Am I doing it just because I don't want to lose? No, do not do that. Okay, am I doing it because of my opinion that the market's going up? No, don't trade your opinion. You'll lose. Okay? I'm doing it because of what I see. Not because of my P&L, not because of what I think, but what I see on the chart. I see markets flat. I see everything either lining up in my direction on the greens or the reds or whatever, or even if they seem to be contrary, there's no trend in the contrary indicator. It's just, it happened to break it by a few ticks. Since you're a stock god, can you ask it to pop up, hit my take profit on my long EOD, and go back down and hit that hedge? I wish I could call upon it to do it. That's funny. So yeah, we're working on the triple volume spike. We'll let you know about that shortly. Okay? It's not a BMT, a barely missed trend. So, I don't even know if it's barely missed, man. It didn't even try. It just... That's a wannabe trend. A WBT. But, yeah, Mark had up a great video the other day. It was hilarious. I posted it in the forum. I saw you post it in the room, and what it was talking about, it was like Dan Aykroyd and all them, and just like quoting all the different initials. But and then I just flip over, like I said, a conservative. If I do see everything going against me, if I do start to see a trend, if I do see the 10-minute flip, then yeah, let's just tighten the thing up and get out. But does that make sense? Y'all got those three pieces? Robin Williams, yeah. Okay, well, I'm going to go back, and I'll also be making a shorter version of this. I'm going to work through it with you. The EPC, by the way, if you got this down, EPC's a cinch. Last 15 minutes, if you get a signal, go with it. Okay? Like the last 15 minutes of expiration, if you can get, now stick to the strike. So when it gives you the strike, you got to stick to it. Stick to the breakout. You got to stick to it. You can't give any slack on either one of those. Okay? And the only rule is on 1 minute that you it has to wind up with 2 minute. Do not use the aggressive strategy. That is not allowed in the expiration premium collection. Moderate or conservative only. And that's all there is to it. So if you understand trend trading premium collection, expiration premium collection is really simple because we get rid of all the different models. We get rid of all of the looking at everything. And we'll take 1, 2, or 3, or 4, any one of those. Just a filter on one has to line up with 2. So somebody talked about, Darby said the biggest thing for him was having the ticket ready. So as soon as you see that, and you can, by the way, you don't have to wait on the arrow. You know, hint, hint, when the price gets really close to the volatile trend line, good chance it's going to flip in the next couple bars. You don't have to wait on the green, arrows. You don't have to wait on the green lines. Now, you do have to wait on them to enter. But as soon as you see the price getting really close to that solid line, good chance it's going to flip. It's got to break that predictor, and it's got to break the solid line. So we're getting close to the solid line. We're getting close to the predictor. We're probably going to flip. If the predictor flips, that gave us a heads up. So, I mean, you knew, like, 20 minutes in advance before this ever happened. You had plenty of time to be ready. So definitely think ahead. Don't just wait on the arrows, because sometimes it'll be like, boom, boom. And that's actually why we plot the predictor. Otherwise, there'd be no reason, besides, use it as a really tight stop. There'd be no main reason to plot it. It gives you a heads up of a possible change. So when I see that predictor flipping and I see the price getting close to the volatile, it's going to flip soon. I mean, or it may flip soon. So I can, if it's not going to flip, it doesn't hurt me. But if it is going to flip, I want to be ready so I don't miss out on the trade. So that's a great point. Trigger price, I don't know, it was added in one of the recent updates. So just re-download and you'll get it. So yeah, practice, practice, practice. It'll become automatic to you. Exactly. If you want to practice like just getting it down, and I'm not talking about making money, okay? I'm just talking about just getting it down. Just hop on the 1 minutes and just start taking every trade. I'm talking about in demo. But just start taking every trade. Like go in trigger price, boom, okay, strike price, what should I choose? Okay, I'm going to do this. Okay, and hit this stop, okay, I'm going to get out. Like, let me adjust my trigger price for my stop loss, let me put my take profit in. Just to, again, this has nothing, I don't think you're not going to make money just doing 1 minutes. Like back and forth off of the hour. Only use those in the last 15. But for practice, you could hop in and literally do like 20 trades, maybe 5, 10 trades in like an hour, easily. And just to go through the motions of trailing stops, putting in trigger entries, putting in limit entries, checking out the different methods and all that. So that'd be just an easy way an exercise to speed it up while because if you're trading the 4 minutes, it may only be 1 or 2 trades an hour. But a good suggestion. So, Darby. Okay, well, that's it. That's really all we got for today. I think we've covered quite a bit in that. Any remaining questions before I wrap it up? All right, I'll see y'all on the radio show. Thank you.